I guess following the Spanish influence for Carmen, I will say buenos dias, everybody as well. So first things first, we wanted to say thank you to the BAFT community, as well as our sponsors, Eddie and mentors. We have been having quite intense months, I would say, so that, in my opinion, we created a little family, which I think is also the goal of the Future Leaders Program. So thank you so much. Now, after this cheesy speech, coming back to our project, our topic, accelerating cross-border RTP, or I will say the topic, but let's start from the beginning. What's the basis of our project? The basis, and I think we commented as well yesterday in Patrick's webinar, the G20 goals. So in 2020, the G20, together with the FSB, they created a clear roadmap with clear targets for 2027 to enhance cross-border transactions. So now, what does this mean for us? All banks and PSPs, we need to be able to provide at least those 4 things that you see on the screen. Also very important, which by the way is already happening. 75% at least of all cross-border transactions to be created within 1 hour. Again, already happening. But this is the most challenging one. Global average cost per payment to be less than 1%. So we cannot say that we are working in this industry for 20 years yet, but RTP is not something new, right? Since we started, we are hearing RTP the whole time. So that today we have domestic successful RTP systems in more than 80 countries. You see it there in blue. The interesting of that is that 50% of those domestic RTP systems are, from a technical perspective, to be able to be interlinked. With that, I'm going to leave the stage to my colleague, Elena Rozas, to comment on the cross-border ones.
Thank you, Israel. So, as Israel was mentioning, there are already domestic RTP systems live, and we've done an analysis of those in our paper based mostly on a regional basis. And today we wanted to highlight some of the ones that already have cross-border activity or are a good example that can be adopted in the near future, the cross-border activity. So in Mexico, we have SPI and SPID that is not cross-border yet, but could be a good example for adoption in North America. PIX in Brazil, that is already cross-border with some countries such as Argentina and is leading the industry in South America. SEPA Instant in Europe, that will be ready by end of this year. We have Buna in the Middle East that is connected with TIPS in Europe and PAPS in Africa. UPI in India, PPPN, that covers the corridor between Singapore and Thailand, and Project Nexus, that is a private initiative backed by central banks and aims to connect with domestic real-time payments in Asia. So having reviewed the current RTP systems that we have and some of the cross-border activity already covered, we want to focus on how to accelerate adoption. For that, we've done an analysis on where are the cross-border payments now. Looking at Swift Traffic Watch data for December 2024, we focused on the 45 million cross-border commercial payments. In the paper, you'll be able to read about origin and also destination, but given the limited time today, we just want to focus on the major corridors. So 29% of the activity is happening within Europe, which will already be covered by SEPA Instant. If we take out intra-European payments from our heat map analysis, we see major corridors are between North America and Europe, also North America with Asia, and mostly as well within Asia. That could also be covered by Project Nexus. So with all that data in mind in terms of where are the cross-border payments now, I leave you with my colleague Ayus that will cover the challenges of cross-border real-time payments.
Thank you, Elena. So if we look at the global cross-border landscape today, effectively there's 3 major constraints that we've highlighted. First is liquidity. Most schemes that exist today require heavy pre-funding. So that means banks have to tie up a lot of capital. There's high opportunity costs. It restricts scalability, and effectively funding is required over multiple currencies and jurisdictions. Obviously, for higher value transactions, this is much more significant. Outside of that, when we look at real-time FX capabilities, they remain limited, particularly across emerging market currencies. Second is AML, KYC, and sanction screening. Fragmented systems exist today. Obviously, that leads to high delays in payments, higher costs, and restricted interoperability. And third is geopolitical uncertainty. When we look at the macro environment, I think there's been enough talks, even while we've been at the BAFT conference, around the impact of tariffs, trade uncertainty. But fundamentally, in the banking community, trust underpins all collaboration. So what does that mean? Well, when we look at the analysis we've done in our paper, we effectively have come up with 4 foundational pillars that are required in order for organizations to adopt cross-border RTP. First is common standards. Widespread adoption of ISO 2022 and API integrations remain essential to driving connectivity. I think a good example of this is Project Nexus that my team has highlighted. And it does show a lot of early signs of cross-country collaboration. Second is anchoring in strong domestic RTP schemes. So as an example, cities work in their corporate flows. Integration with UPI, FedNow, and SEPA is a good example of where this works today. Again, the same constraints lie on pre-funding. Third is regulatory alignment. Harmonization of KYC, AML, sanction screening frameworks are paramount in order to enable cross-border RTP. When we turn our attention to Buna in the Middle East and PAPs across Africa, these are good examples of where early adoption has made sense and there has been good take-up rates. And finally, compelling use cases and business models. We've entered a new paradigm in the world of payments with a race to the bottom when it comes to payment fees. What that means is effectively those companies that move towards subscription-based models, encompassing a wider cross-sell and an ecosystem approach will be the most successful in capturing the value added by cross-border payments. With that in mind, let me hand over to Mafalda for our conclusion. Thank you.
Thank you, Ayush. So we've heard about G20 goals, prerequisite, challenges, but then how do we move forward? So the core element is to focus on the commercial viability of the solution to ensure it becomes profitable for all stakeholders, but especially for us providers. How do we do that? It's a tough question, right? So first, we thought we should target corridors that are already having a high volume of transaction, that have already implemented systems that can support RTP, but also that have already tackled some of the regulatory challenges. We also need to think about how we're going to charge our customers. We need to make sure we implement a sustainable economic model that will benefit everyone, especially given the high upfront investment fees. And by that, maybe in order to tackle those challenges, we need to focus on corridors that are very active, focus, for example, as well on low-value payments, use local RTP systems that are already live, and use common standards. I will let you reflect on that, but all that's to say that it will take time for the cross-border RTP to get adopted at a global scale, especially given the complex world we live in, but also that is driven by geopolitical interest. But each solution implemented is a step forward. Collaboration is key, especially between private and public sectors, but also between banks and fintechs. If we can create a more transparent and trusting environment for the customers, for sure, the adoption of cross-border RTP will grow. I invite each and every one of you to read our paper, and I will now hand over the question to my teammates. Thank you, everyone.
Everyone. I see some questions coming through, and we're just taking a look to see which one is the most popular. And I think one of them would be, I'm trying to take a look here. I think that there was a question about who's going to bear the cost. I think that's pretty critical, and I think Victor, you discussed a lot of it.
I can take it up. And just tying it back to a little bit what Israel said in the beginning, like the G20 has set out clear ambitions of where we go in 2027 with faster and cheaper and more transparent payments. And our group and market agree that it is probably the private sector that is going to carry the cost of the implementation of upgrading infrastructure and navigating compliance and so forth. But the question that we ask also is, are banks and payments service providers ready to make these investments today if we don't see that the demand is very widespread? And that is where we think that the public sector has a very important role in pushing for harmonization and adoption by maybe regulations or different type of incentives. And I think a good example of that, if you look in Europe, for example, the European Commission has made it mandatory for European banks in the Eurozone to be able to send and receive instant payments by 2027. So we think that the short answer is it is the private sector that will front the bill for this, but there needs to be a push from the public sector in terms of regulations or different type of incentives. Thank you.
Okay, I see a question on commercial viability, so I'll take that. So our team, we've identified 4 success factors on this. Number 1 is really on the network scale. So the power and value of any solutions will grow exponentially with the addition of countries and FIs. As what Elena shared earlier for SEPA, it has very comprehensive EU coverage. Number 2, it's on regulatory harmonization. The reason for that is because these solutions are heavily dependent on both legal and compliance alignment. Again, SEPA comes to mind, but as what Ayu shared earlier, there's also Buna in Middle East and TIPS in Africa. Sorry, not TIPS, and PEPs in Africa. That's right. So on this, you've heard from him that there's been good progress on this regulatory front. Number 3, it's on cost and operational efficiencies. This is where I like to highlight Project Nexus because of the great promise that it brings. Not just because that Nexus is from Singapore, and you can probably tell from my accent, I'm Singaporean. It's about the hub model that Nexus proposes. Instead of the multiple bilateral integrations, it's about the whole one connect to many. And in this instance, if there's an integration into Nexus, it will then make available to all the participants within the Nexus universe. Number 4 would then be on the end user demand and trust, because, I mean, frankly, if there's no demand, if there's no trust, there will be no push for these solutions. So all in, I like to just encapsulate that it's these 4 factors, but the solutions will also need to cater to the very specific needs that these regions or corridors may require. Thanks.
I see a question regarding demand, and actually demand was a key topic in the writing of our paper. It was a question that was central to the writing of the paper, because if we don't have a demand, we wouldn't have anything to sell, right? So we identified 2 sectors of the demand, one especially from the individuals, which by its nature they do have a demand for a more quick payment. You can imagine remittances having an emergent and urgent matter. The other part of the demand is corporates. For the time being, corporates are able to pay and to anticipate payments in a more controlled way. So maybe corporates are not pushing there, but we do think there that there's a dormant demand in which the fact that the market is not offering real-time cross-border payments at the time being, the corporates are not using this product. But we do believe that the market is going towards faster and faster payments, and we want to be ready to be providing these corporates in these changing environments to be able to fund their accounts and do cross-border payments as quick as possible. I just want to take an example, just 20 seconds to take an example for an example that's very close to my heart. Like 20 years ago in Mexico, the central bank and the regulators started pushing banks towards real-time payments, speed, of course, you know. So there was the same question that I'm having now regarding demand. You know? So everyone was saying, like, you can write a check, you can do a wire, you can wait an hour for a payment. As soon as the regulator implemented and got every bank, of course, in Mexico we only have 50 banks, but we need to think in a larger way. We saw the adoption was almost 100% by now. So we do think that the public and a private initiative must be essential to come together to get through this RTP.
Yeah, and I'll just take one last final question before we keep you hostage from the much needed coffee break from parties from last night. And I think there was one question that was really critical was, what is an ideal cross-border RTP model? And if you've paid attention to us with these presentations, we talked about the G20 goals, the current schemes today, but also the risk and challenges. But what we did not do was kind of give you a conclusion of one single ideal solution. And it's because there really isn't one. There's no one size fits all. And it seems like an easy answer to say there is no answer. But we've seen that there's regions that have adopted the bilateral agreements because they have gotten a regulatory alignment and standardized harmonization. So with Thailand and Singapore, that's available today. But then we also see the Middle East with BUNA, where you have multiple countries kind of coming together and addressing that alignment to get to those regulatory harmonization. So it may not be a single solution that we see across the globe, but it's more about, is it like we see if you're interlinking existing schemes today, you can get to market faster. So if that's a priority, have those bilateral agreements in place, or if you can be, have more time to be strategic to get in alignment, then use a model like BUNA where you can have a lot of countries get connected together. So long-winded answer to say there is no single one, but really encourage everyone here to go look at our white paper. We've spent quite a few time on it, so really encourage you, and then thank you again.